We're back at the SALT conference in Las Vegas with former Treasury Secretary Larry Summers. Larry, Anthony mentioned secular stagnation. You've written about it. What is it, and why is it important for people to understand?
It's a chronic excess of people want to save more than businesses want to invest, which means there's always lower downwards pressure on interest rates, always the prospect of bubbles in existing assets since people don't want to create new ones, a tendency towards slow growth and low inflation. I think it's a defining malady in the industrial world.
For how long, sir? Is this a decade problem?
Well, the word secular means that it's going to be with us for a long time. Nobody can forecast what's going to happen 20 or 25 years from now, but I think we're talking about a decade. And beyond that, it's very hard to be visible. It doesn't mean that things won't ever be strong, but the tendency will be towards weakness. I think the zero lower bound on interest rates, which many people thought was a one-off episode associated with the financial crisis, is always going to be a concern. That doesn't mean interest rates will always be zero, but there will always be a concern about that zero lower bound. Look at it this way. On past patterns, the odds are 50% at least that we'll have a recession within the next 3 years. There's no way that we're going to have the 400 basis points of room that the Fed usually uses to respond to a recession. And so we're a more brittle economy than any of us are used to.
In that economic environment, we've got millions of viewers watching the program who need to live off their savings. It's been a struggle for them since 2008. I know you don't want to give financial advice, but what type of macro advice, what type of thinking should they put into their own minds in terms of where we are?
If we as a country were more focused on investment, public investment and private investment, it would make a contribution. Infrastructure, but also removing barriers from the tax system, from the regulatory system, to private investment. They're both left of center and right of center answers. If we were more pro-investment, if we do a good job of protecting Social Security so people can feel comfortable spending, I think that will help push the economy forward. I think people have to be careful in managing their own lives, not to take on excessive risk just because they're frustrated by the low level of rates. That's like starting to throw the ball on every play early in the third quarter, and even if you're behind, it usually ends in grief.
Gary likes to throw the ball a lot, though, but let's talk about the Brexit for a second. The UK government's going to have a referendum next month about possibly leaving the EU. What are your thoughts on that?
June 23rd. Big mistake for Britain, big mistake for Europe, big mistake for the United States.
Tell us why.
And big mistake for the world.
Tell us why.
Because it would represent a break of traditional ties that have generated large amounts of business and commerce.
So free
because
trade
it would be a
good.
lurch towards protectionism, because it would threaten the City of London as the global financial center.
So but in your opinion, free trade is good?
I think we want more open markets in general rather than less open markets. But free trade is free trade. If free trade means laissez-faire, it means no rules. That's certainly not the kind of trading system we want.
Some kind of fair, regulated trade. But why do you think these candidates have tapped into this seismic feeling in the American population about free trade and NAFTA and the TPP?
People are frustrated, and when they're frustrated, they want somebody to blame, and the easiest thing to blame is foreigners. Here's the truth. Rightly or wrongly, the United States has had hugely open markets for 40 years. We haven't let more products in because of our trade agreements. Our markets were open 40 years ago. What our trade agreements have done is they've caused other countries' openness to catch up with the United States.
That's positive for the United
openness,
States.
And that's a positive for the United States. That's why I supported NAFTA. I supported the WTO. I support the TPP. I think that not because I'm unconcerned about the effects of trade on the U.S. economy. We need a much more aggressive strategy for dealing with that, but because we're not taking more of those risks by passing this agreement, and we are getting a lot of market access in other countries.
You know, Professor, President Obama is writing the narrative right now on his legacy. A couple weeks back, he said he made the decision to push Obamacare, the Affordable Health Care Act, as opposed to an infrastructure bill at a time where he could have really focused on the infrastructure bill at that time. Was that a mistake?
History will have to be the judge. One of my biggest regrets from that period was that the country did not launch a longer and more sustained public investment program. I think we'd have a stronger economy if we did that. But I also think we've gotten a lot of economic benefit from what's happened in health care. And the fact that the health care cost curve has been bent is a big win for America.